Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's going to be Andy Swan, co-founder of LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, so we're talking Royal Caribbean. Obviously outperformed all the other cruise lines in the space. Hit all-time highs earlier this year. It's pulled back. It jumped 12% after the last earnings report. It was a good report. What kind of data do you guys have here on RCL?
Yeah, full steam ahead on Royal Caribbean. We think and have thought for a while this is best of breed among the cruise lines, and the cruise lines are in a pretty good industry with a nice tailwind here. When we look at Royal Caribbean versus the others, in terms of web visits, Royal Caribbean's pretty flat year over year, and usually this is a pretty good indicator of bookings. So we think that they're maintaining their high level of bookings, and when you compare it versus their competitors, they're really blowing everyone else out of the water. The other thing that we like to look at is Royal Caribbean's app engagement, and this is where you really get a feel for how much people are getting prepared for their travel or engaging in their travel activities and how efficient Royal Caribbean is being. That's up 60% year over year on a monthly basis, which is a very, very positive sign for this company. So, we see the Royal Caribbean as best of breed. They're executing at an extremely high level. They're rolling out new ships that command very high prices. They're rolling out a new cruise experience where they're going to start doing river cruises in the United States and elsewhere. And so this is a company that's very forward-looking, and they're very much in the right place because millennials and Gen Z are booking cruises at a much higher rate than some of us are probably used to. And so Royal Caribbean, very good spot here. The stock has made a nice run. We see that as fully justified and remain optimistic into the future.
Andy, this seems to, in my opinion, and I've been on celebrity cruises, I've been on Silver Seas, and they are an extremely well-run company that frankly just keeps getting the whole post-COVID environment for them. Debt ratios improving, liquidity strong, increasing cash flow, well-positioned for future growth. They keep adding boats. The overall demand that never went away, frankly, for cruise lines is strong. And, oh, by the way, I'll throw in a kicker. They would benefit from lower energy prices. One of their big expenses would actually be a windfall for them. So this is a company that just needs to keep doing what they're doing, and the balance sheet, still recovering from COVID, keeps getting better and better. Andy, it's hard to say what they should do better than they're doing. It's one of those, give them a pat on the back and tell them to keep going.
Yeah, I think that's exactly right. They've navigated these waters really well. You got to trust that they have the right captain on the ship. The biggest threat that I could find to Royal Caribbean when I look through this, of course, there's just obviously always macroeconomic concerns that can weigh on a company like this. It's one of the first things probably that people stop spending money on in a poor environment. But the biggest thing other than that was just tax implications. I think the Commerce Secretary came out and signaled that the cruise industry was going to be under a target for using, foreign registrations and that sort of thing. So you're in a pretty good spot when your biggest risk is tax code changes, and that's where I think Royal Caribbean is. They're executing not just on the revenue side, but I think they're also doing a very good job on the expense side. They've cut the amount of time it takes a user to go from searching to booking by 50%, which is an enormous accomplishment in that industry. And they're also utilizing AI on the ships to rely less on customer support staff actually physically on the ships. And so they're cutting expenses while they're growing revenues. I don't know what there's not to like at this point.
Yeah, so you guys are bullish on this. Your data is reflective of it. You mentioned Howard Lutnick, the new Commerce Secretary, basically coming out and saying, hey, they're flagged in different countries, so they're not paying the full tax rate. They're paying the port taxes, but they're going to try to close that loophole. That might be a headwind. But Andy, are you guys seeing anything, because consumer sentiment, consumer confidence numbers starting to wane here a little bit, even though personal consumption and spending still robust? Have you guys seen any cracks across maybe this sector or any other sector that's reflective that, hey, the consumer might start slowing down on some of these discretionary purchases like cruises?
Yeah, we saw a little bit of it with travel, and we've talked about that on here before, some slowdown there. But I really think that these companies are in a really good spot in terms of the demand levels were so high coming into this year. If they can maintain their demand levels, they're actually able to expand the ticket price that they charge, and the customers that they're going after are on the right side of the economic divide that's occurring. I think that the economy is starting to very much hurt a portion of, and has for over a year now. It's starting to hurt a portion of the citizens of the country and the consumers. But the other 30-20% of consumers, the people that go on cruises, that book these expensive trips, they're doing just fine. And I think Royal Caribbean knows it and is taking advantage of that with every room that they sell.
Yeah, and their margins increasing because those excursions and things and their private islands and stuff really helping them. All right, great stuff, great data as always, Andy. Appreciate it.
Thank you.
All right, that's Andy Swan, co-founder of LikeFolio, breaking it down for us. Kevin, in correction territory, down 11.5% from those all-time highs that we saw in January, but we filled that gap to the